Okay, let's unpack this. We're diving into the 9-month 2025 Consolidated Financials and Activity Report for Bin Ulashim ve Akula Technologileri Shin. You probably know them as Bin Bin.
Right. And this deep dive is really geared towards you, the individual investor. We want to cut through the noise and find the story in the numbers.
And there is a story here, a bit of a conflict, really, between how the business is running day to day and those bigger economic headwinds.
Exactly. But before we get into that, just a quick reminder, if you find this useful, please do like, subscribe, and maybe share this deep dive. It helps others find it.
Okay, so first up, who is Bin Bin? Founded back in 2016, based in Umarania, Istanbul.
Their main thing is micromobility, those e-scooters you see around, but they also do smart city technology.
And their strategy, particularly in the Balkans, is interesting. They went in early, aiming to be the first mover in places like Bulgaria, Bosnia and Herzegovina, Croatia.
North Macedonia, Albania too, trying to lock down those markets before competitors really got established.
Okay, ownership structure. It looks like 1,000 Yatırımlar Holding HA holds the majority, about 75.22%.
Yeah, that's the main holding company. And the board. Currently 8 members.
And we should probably note, just looking at the list, there's no female representation on the board currently. That's something investors increasingly track, for governance.
Good point. And speaking of management and structure, there's been a pretty significant change in personnel.
Oh, yeah. What kind of change?
Well, the number of employees dropped quite a bit. They went from 103 at the end of 2024 down to 69 by September 30th, 2025.
Wow, that's a big cut. Almost a third of the workforce.
It suggests some serious belt-tightening. And that seems reflected in the benefits paid to the board and senior management too, down from about 14.1 million Turkish lira to just over 10 million year over year.
Okay, so signs of austerity already. Let's shift to the financials then. This is where it gets really interesting, comparing the first 9 months of 2025 to 2024.
Right. So first glance at revenue Haslight, it's alarming. It fell a lot, from 815.9 million TL down to 441.0 million TL.
Whoa, wait, that's nearly cut in half. How does a company survive that kind of revenue drop? Usually that signals major trouble.
You'd think so.
Yeah.
But this is where the operational story kicks in. Despite that massive revenue decline, their actual operational performance got way better.
How?
Their operating profit margin went through the roof. It jumped from 18.65% in the 2024 period to an incredible 52.07% in 2025.
52%. So for every lira of revenue they did bring in, they kept more than half as operating profit. That's exceptionally efficient.
Exactly. It shows they managed their costs incredibly well. The core business operations became much, much leaner and more profitable on a per-unit basis.
Okay, operationally strong, but then the bottom line. The report shows a net loss of 180.3 million TL. Last year they had a small net profit. How do you go from a 52% operating margin to a huge net loss?
And this is the crucial part for investors to grasp. It's driven by things below the operating profit line, specifically one massive item, the net monetary position loss.
That sounds like inflation accounting.
Yeah.
GMS 29.
Precisely. It's the impact of high inflation accounting. That line item alone was a loss of 367.4 million TL.
So let me get this straight. The actual business operations were highly profitable, making 52 cents on the lira operationally. But then the accounting rules for hyperinflation forced them to book a huge loss just because the value of money itself eroded.
You've got it. It's like they ran a great race, won operationally, but then the rule said, okay, now subtract the impact of the currency depreciating. It wiped out the operational success on the final net income figure.
That really highlights the challenge of operating in high inflation environments, even if your core business is strong. What about their balance sheet? Can they weather this?
Actually, yes. Their balance sheet looks remarkably solid. Liquidity is still very high. The current ratio is 9.43.
Which is very healthy. Means they have plenty of short-term assets to cover short-term liabilities.
Right. And even better, they're in a net cash position. Net debt is reported as negative 507.7 million TL. They essentially have more cash than debt.
So they have a cushion. Are they using it? Any investments?
They are. They're continuing R&D, particularly the YTU Technopark. Focus seems to be on software modules and developing this super app idea.
Integrating their different mobility brands like QCharge and Taxium into one platform.
Seems like it. The main investment activity this period, though, looks like shifting funds around less in financial investments, more into cash and receivables from related parties.
Okay, so summing this up, Bin seems to be running a much tighter ship operationally, hence the soaring margin and lower headcount.
Definitely, they've improved efficiency dramatically.
But that huge inflation accounting hit shows the brutal reality for companies, especially high-growth ones, needing capital in this kind of environment. Inflation can just erase operational gains on paper.
It's a stark reminder that the headline net income number under TMS 29 needs careful interpretation. You have to separate the operational health from the mandatory monetary adjustments.
So, for you, the listener, what's the takeaway? Bin appears operationally efficient, liquid, and still investing in its future platform, but that net loss figure is heavily skewed by inflation accounting.
Yeah. It's not necessarily a reflection of poor business management day to day, but rather the harsh macroeconomic environment being reflected as per accounting standards.
Maybe something to explore further is how TMS 29 specifically impacts capital-intensive businesses like micromobility, which rely on constantly managing assets. Understanding that difference between paper losses and operational reality is key.
Absolutely. It helps distinguish true financial risk from operational strength. And yeah, don't forget to like, subscribe, and share if this helped you understand Bin's situation a bit better.